Hello, everyone. How's it going? It's late on a Saturday night on the West Coast. It's early Sunday morning on the East Coast. August 28th, we're going to talk about stocks. We're going to do a little stock market update, and we're going to focus today's video on Masimo Corporation. As I was reviewing all the stocks that we have in this list and putting in target prices and reviewing financials and notes. As I go down the list here, because there's like 1,600 companies in here, and many of them I have not looked at in over a year. So it's important to go through them one by one. You'll see that the newer ones that I've reviewed are at the top and more reliable, and that's why we're going to talk about Masimo Corporation. So Masimo Corporation is probably not a very common name that you would have heard. I had not heard of them until I started doing research into all the ticker symbols on the Dow Jones Industrial Average and the Nasdaq. I can say that they're a company that makes sensors that end up, non-invasive sensors for hospitals, emergency medical services, as well as long-term care facilities. And you can see that over the last year, they were way up at about $300 a share at one point, took a steep decline. They have a heavy short interest of about 8%, which means 8% of the people that own the stock are kind of betting against it in a lot of ways. It's kind of what short interest means. And that's a relatively high number. And it means that when they do drop, they will have sometimes stuff like this, which are huge drops because the short interest takes over for a while. Well, I'm looking here at what was a down day on Friday for almost the entire market, right? So a lot of things went down and some things are becoming a little cheaper, at least short term. But when you see this, I'm thinking, well, why are they staying down here? Is there something wrong with their finances? Is there something wrong with their business model? No, not at all. As a matter of fact, the opposite is true. The last quarter, they had like 500 million in revenue when they normally have about 300 in revenue. They are selling more of their product, and more of the public is aging and becoming in need of their services. Because remember, they supply us to long-term care facilities, which is another area where, as we have an aging population, there's an interesting setup where that's a really expensive service. And we're looking for ways to lower costs, but we're also looking for ways to monitor and maintain the health of the aging population. So here's a company that supplies products for that service, and they have good financials, and their revenue's up recently. So there's a lot of reasons why I like long calls on them. And I put their target price at 180. They have potential to go over 200. It's whether or not that short interest will be impactful and bring them down for some reason. But if they keep putting up big revenue numbers, then that's going to be overwhelming, and it's going to push them up, and they're going to fluctuate. So I do recommend a long call on Masimo. That's something I'm going to look into, because they're not that expensive for about a quarter down the road. You're looking at a few $100s to get something like 180 strike price long call. So that's the Masimo review today. They're way up on this list because I was just surprised to see how cheap they are and the increase in revenue. Even though there wasn't an increase in operating income last quarter, that's because cost of sales were up a little bit, but I think they got big orders or something and had to fill them. And that's you run into some additional costs when you have to build a lot of product rapidly. So even though revenue is high and sales are high, sometimes costs get a little higher until you figure all that out. Well, they're probably developing new products as well. And there's a whole lot going on here, and I really like it. So there's Masimo Corporation. We still love our Tesla. We're going to keep an eye on our Tesla. They're down like $8, getting super cheap. I would always say buy long calls on Tesla. We have some we're tracking. They're down. They're only like a few $100 each, I think, right now. So the $2,000 strike price that I've talked about is probably only worth about like $600 right now. We'll see. We'll keep tracking it. They're a fluctuating company. As soon as they start looking cheap, you can expect them to go up. So we'll keep watching them. Is there anything else I want to talk about in this video? No, I'm just going to keep going down the list. I mean, I'm going to get through all of these eventually, and I'm going to shrink this list and remove companies that I would say never invest in and just stay away from completely. So this will be an easier load on your phone. There'll be fewer formulas going on eventually once I fix it up. So that's the stock update. Masimo is a buy from Ken. That's what I say there. And a lot of these things got a little cheaper on Friday. So strike prices that I have in here, the quarterly prices did not change. All right. Good luck, everyone. May all your trades be winning. And we're out. See ya.